And we're live. Welcome everybody. It's Monday, 11:37 a.m. Central. We were supposed to go live at 12, but we went live at 10:30 instead. Look at this. We're even earlier in the day, so you guys can spend your mornings with us. So honored to have you guys in with us today. Nico from Investing Against the Grain. How you doing, brother? Good to see you again.
Good, man. It's good to see you. It's been a minute.
It's been a minute for sure. If you guys don't follow Nicholas, make sure you go look him up. Investing Against the Grain on YouTube. He does amazing content around investing. He covers Tesla quite a bit as well. I'll have producer wife bring up his link here when she has time. But yeah, man, Nico and I have feel like we're friends. You know, it's like we've met each other in person a couple of times. Feel like our we kick it off, our spouses kick it off. Like we just kind of like our two peas in a pod or four peas in a pod, I guess, if you want to math it up correctly. So yeah, man, it's been a pleasure getting to know you, and thank you for coming on. And I'm excited to talk all things Tesla, really, because the big thing that's happening today. And producer wife, when you get a chance, pull up the chart. I'm like having her do everything today. Go ahead and pull up the chart when you get a chance. Tesla is performing really well today. Tesla stock in relative to the performance for the last few weeks and months, if you want to call it. It seems like the last week or so, there's been a lot of positive momentum building, it seems. But I'm really curious to sort of hear your take on where you think Tesla's going. So 121.55 sitting on Tesla. Shout out Yashu. Up 7.57%. As you can see from the chart, since the 27th of December, we've kind of hit this, I guess some might call it a bottom-ish area. And it's sort of starting to form this maybe reversal. But I want to hear your thoughts. I know you were on Tesla Herbert's channel, or Brighter with Herbert. Sorry, I used the old name. I think last week, Friday or Thursday sometime. And you shared some thoughts there. I didn't get a chance to watch it yet, but you kind of primed me a little bit before we went live as to you might have some contrarian thoughts. So I would love to hear your thoughts. Give us a brain dump, and then we'll take it from there. What are your thoughts?
Yeah. So first thing, for anyone who's looking at me and thinks I'm high or anything, no, my eyes are just red for some reason today. I get up really early every day. So just a heads up before everyone starts freaking out about that. Not that there's anything wrong with that. You know, everyone has their own ways. Anyways,
I'm high. I'm just kidding.
Tesla's high. How about that?
Yeah, there you go.
So let me kick this off. I am a huge Tesla bull. I believe in the future. I think it's the biggest no-brainer there is out there. I think they're going to execute beyond belief. I think they are executing. I think the story is beyond obvious. But that story is obvious looking at a bigger time frame. I think if you try to collapse the time frame of what we're looking at with Tesla, say over the next 12 months, my views on it, I think, are a little more sobering. And this isn't just the stock itself, but it's even the fundamentals of Tesla. And so I know there's been a lot of people who have, slammed the tables and defended about demand issues. Are they, aren't they? What's going on with 4680? I know Tesla economist is talking a lot about that. Like, there's a lot of stuff going on. What I think should be unequivocal is that the next 12 months, let me frame this delicately. None of this financial advice. My take on Tesla stock over the next 12 months is that odds are, I think we haven't bottomed. And I think odds are that it's going to be a rough year. Now, I do think we end the year higher. I still think Tesla hits a volume of 2 million vehicles. I think all that's going to happen. But if I can't stress this enough. Everyone believes in Elon when it comes to full self-driving, when it comes to the batteries, when it comes to the mission, when it comes to everything, right? We all believe in him. If that holds true, that we believe when he says these things, because he's been so accurate in the past, and maybe his timelines aren't always accurate with really only a couple things, but he's been accurate. He's been right. He's been the horse you don't want to bet against. He's been Kobe Bryant. He's been Michael Jordan. You don't bet against them. You just don't. It's foolish. If all of that holds true, then you also can't ignore the fact that this same man was just on a Twitter Spaces, and he was telling us, prepare for a huge turnout, a huge recession, potentially as bad, if not worse, than 09, 08. And I think you can't ignore that. I know people are getting excited because CPI is coming down. People are getting excited because that jobs number, which was hotter than what it should have been, but they saw wage inflation slowly ticking down a little bit, not as hot as we thought. And people are thinking, oh, this is what the Fed need. Like, I get this whole narrative. But what's important to remember, and if you watch the All In podcast, they highlighted it beautifully. We have yet to see the actual effects of the interest rate hikes, and we still have yet to really experience what happens after the Fed stops cutting rates, which tends to be a recession. So I know it doesn't look like we're going to go into a recession. We may not, but I'm just saying, when Elon's sitting there saying, and Elon's really, his view is really only what he directly controls. And what he directly controls, even if we don't go into recession, he sees the signs for Tesla clearly. And he's telling us over the long term, it'll be very valuable. But buckle up over the next 6 to 12 months. And so that's why I just feel like everyone needs to like chill out with this whole, did we bottom, did we not bottom? I think Chamath said it best. I would rather miss the first 15% up than get in now and just have further pain downward. And so I'll stop talking a second here. So for me,
take your time.
What I've been saying pretty much since we're at $200 a share is that I'm done dumping money into Tesla. I'm at a point where I'm just building up cash reserves now. I'm just building up cash until I feel that it's clear that we've bottomed or we're off the bottoms and things are going to go better. But right now, I just think there's more turmoil ahead that we have to go through. As much as it seems like, what else could we possibly have to go through? So that's kind of my take. Again, bullish over the long term, but over the short term, I'm listening to Elon. I'm listening to Chamath. I'm listening to these people who have been right over and over and over again.
Do you see any signals in the sort of where you live, where you are, that kind of back up your sentiment? There's a few that I've seen that sort of lines up with what you're saying, that could be like a catalyst for this potential scenario where the economy is going to be in a just as bad a shape as, hopefully not, but there could be some signs like 08 and 09. But what are you seeing anything locally or within your world that could point to that?
Yeah, so I see it in housing. The fact that housing prices are coming. So, all right, it's one thing for housing prices to come down. It's another thing for those prices to come down, then buyers to step in. I'm seeing prices come down and no buyers step in, which means prices are going to come down even more, right? So it's almost like this. Do you want to catch that falling knife? So that's one thing I'm seeing, and I live in an area where real estate's really expensive. I mean, I'm essentially on an island, and like there's no more land, right? So what you buy is very valuable to begin with. So that's one aspect of it. I'm definitely seeing, and this is maybe a bigger concern, I think, I'm seeing people still out and spending like nothing has happened and we're still in 2019. Why is that a big issue? Because again, if you look at credit card debt, it's soaring. It's absolutely soaring. So while people can sit there and say, oh, the Apple stores are full, Tesla stores are full, all this stuff, the malls are packed, that's a symptom, right? That's a symptom of a bigger problem, which is everything happening to credit card debt. So I'm seeing that around where I'm at. I would have thought that people would have been like, tightening the belt a little bit, seeing where they need to cut back. I mean, again, All In podcast, I'll tie back to them. Chamath, he drove to vacation instead of taking his private jet because he was blown away by how much his household was spending. When a billionaire is doing that, like that's got to be a signal. That has to be a signal to us. If for no other reason, it's just a good financial habit to rein it in, clean it up, right? We got past the holidays, bring it in. Don't eat out. Don't drink alcohol this month. Whatever else you got to do. Anything that you're spending money on, wait 2 or 3 days before you do it. Calculate how many hours of work you would have had to do to buy that thing. Is that worth that many hours of work, right? Like start scrutinizing these things. But yeah, so I think the signs that I'm seeing are a lot of those. And then there's Tesla specifically. Look, we went from having I was keeping track of this towards the end of the quarter. So we had about 200 to 250 vehicles in inventory within 200 miles proximity of where I'm at. it stayed there pretty much all the way up until the last 2 weeks. And then Tesla had the 7,500 credit and the 10,000 supercharging miles. And that started to fall off, and it fell off fast. And that to me, again, kind of signals that maybe there is, I don't want to say a demand problem in the States, but it does show you that there's a softening of demand. And I don't attribute that to a Tesla problem. I attribute that to where we are economically, and where people might be willing to, all right, well, we'll put that extra Chipotle or that dinner out on the credit card. People are saying, all right, $1,000 a month car payment, maybe that's not something we're willing to swing compared to putting, a couple $100s on the credit card. So it's just a lot of signals like that. And then again, just listening to the people who have been right all along.
Yeah. So a lot of things there. Thank you for sharing all that. So I'll hit the Tesla one first, and maybe the broader economic one next. I think the U.S. softness that we saw towards the end of the year and the sort of price correction call that Tesla did, I really do feel like that's directly tied to the EV tax credit for Tesla specifically. Because I think Tesla buyers, are very aware of the different variables that go into purchasing the car. I think they're very, plugged into the world a little bit, and they understand that, hey, there's an EV tax credit going live in January 1st. And I think what was happening was people were waiting to buy the car. And then all of a sudden, once they announced the $7,500 credit, which is equal to the EV tax credit, they freaking clear the inventory out. And then when I was watching the inventories actually for Tesla now, it seemed like the only car that's really in inventory right now in the United States between the 3 and the Y is the Model Y 5-seater. I'm going to send you, producer wife, a link if you can bring this up, the EVCPO link, that keeps track of all the different inventories for Tesla cars. It seems like the only car that's in inventory for between the Model 3 and the Model Y is the 5-seater spec, which is the one that's not getting the incentive that's been such a big part of my channel. So if you zoom in quite a bit there, producer wife, into the page and scroll up a little bit, there's like stuff on the left. You see where it says USA on the left there? Go ahead and click that, and then see if you can do hold control and then mouse click like your wheel in. That should zoom in. So if you hold control, and there you go, perfect.
Yeah.
And then
old people have bad eyes over here.
And then so this is the number of cars in inventory. If you click on the Model 3, so that's how many used Model 3s there are in inventory, how many new there are in inventory in the US. If you click on the Model Y, yeah, so you see there's 55 used, but there's 920 new in stock. And if you click on that, on the new one for the Model Y, then the thing should have switched here on the, so scroll down on the list there on the right. Perfect. So it's loading. Long range all-wheel drive. What is that? Is that all the Model Ys? This is hard to read. Where does it say Model Y? Thank you.
Well, I think because she clicked on it, it's on the long range Model Y.
Oh, perfect. Yeah. So does it say how many seats there are on here? Standard?
But they're all gonna be 5, right? I mean,
they're all gonna have to be 5. Yeah. So if you click on a few of them, I'm sure they'll come up as 5-seater. So I think what we're seeing with the Tesla world is that the buyer is very aware of the EV tax incentive, and any sort of inventory buildup for Tesla, I think, again, in the United States, is due to the unclear nature of the EV tax credit. Mm-hmm. So from a demand perspective. However, the broader picture that you painted around, for the folks that listen to the All In podcast, so Chamath Palihapitiya, I think is how you pronounce his last name.
So much better than I would have done.
Please correct me if the comments if I'm wrong. He's a billionaire. He was the SPAC guy during the sort of call it the COVID bubble. And
well, just to put a little nuance on that.
Yeah,
Chamath, he was the SPAC guy because he essentially showed how SPACs could be successful. Right?
Correct.
He didn't actually have any kind of janky, wonky, weird SPACs. Right? Like, he was legit about it.
Yeah, 100%. Yeah. Thank you for providing that context. But he's somebody who has a lot of money, and sort of he's saying there's a signal there that says, "Wow, look at this rich guy holding back spending." And I remember one of the trends they talked about on the podcast was austerity. Austerity was going to be a big trend that they thought for 2023.
Yeah.
And for those that are not familiar with that term, it's basically like holding back, like living below your means, like really just focusing on spending on what you believe. Which I think ultimately, from a finance perspective, that's just a good thing to do. As a human being, it's smart to live below your means because in time of emergency, you can kind of capitalize on. You have the cash to be able to sort of do what you need to do. And so him talking about that, I think, is a signal for sure. But what I'm curious though is how does that environment truly impact Tesla and say the stock price, right? Because these are the parallels I'm trying to figure out how to connect. Because on one hand, you could have an economy that's in really rough shape. You could have housing prices plummeting. You could have the Fed. If the housing prices plummet and the economy is really not in great shape, I don't see how the Fed continues to raise rates. They're going to have to pivot at some point. They're going to have to stimulate the economy, right?
Do you, when you say you don't know how they could raise the rates, are you saying to 5%, or do you mean beyond 5%?
So what I don't even care about the number. So if the economy is in a rough spot and it's really getting to the point where overspending, real estate getting crushed, interest rates being too high, saving rates going to crap, credit cards debt all-time high, monthly car payments. If you pull up the tweet I posted before that EVCPO thing, babe, the people are paying $1,000 a month for a car loan nowadays. There's a lot of signals that say the economy is going towards a disaster. Yeah, car payments as much as his rent. So this is car dealership guy on Twitter. If you don't follow him, I highly recommend it. He's great. He follows the car dealership industry in the United States and gives a lot of signals. Work at Chevrolet dealership here in blank. Had a customer come in here wanting a 2023 Chevy Silverado LT Trailer Boss. Said his payment will be over $1,000 a month and said it's almost as much as his rent. Signing paperwork in finance right now, wild times. So that kind of gives a signal to what you're talking about, which is like, boy, like people are still, and I love the reply with the emojis, like, God damn it. The people are still spending very, very bigly, if I want to use the term from our previous president, which I'm not a big fan of, but that's a separate discussion. But how does that really impact Tesla stock? Like, why does Tesla suffer in that scenario? Help me connect those dots, if you don't mind.
Yeah. So, all right. So I agree with you as far as the IRA and that being part of the reason why, a lot of, especially at the end of the year, right? Sure. I believe that, but like just using common sense, okay? Just basic common sense. We see across the board, automotive demand is down, right? It's not as high as it's been. We see housing down. We see demand in general starting to come down. We see companies starting in tech laying off like crazy. Why? Well, you lay off because you don't have as much work or demand or subscriptions as you needed before. Now we see Goldman Sachs, right? Now they're doing layoffs. I think JP Morgan maybe announced today as well. Why is that? Well, Salesforce as well, right? So now it's spreading to the finance though. Right? And why is that happening? Because there's less M&A, there's less companies going public, et cetera. So the point is not so much that it's just a Tesla thing, but just using common sense. If everything is slowing down, Tesla's not going to be immune from that. Tesla's also going to, Tesla's in this world, right? They're in this economy. So while I agree with you, like a lot of what I think happened with the IRA or people waiting for that is a lot of the reason as to why we saw such a big buildup in the States. The truth is, just look at China. I think China's ahead of us in what is going to come. And I think China's hiding a lot of the markers, what's happening over there. But I just think it's inevitable, right? Now, that doesn't mean Tesla's going bankrupt or anything like that, right? Any of these doomsdayers people. But the company will probably suffer on margins. I don't think they'll suffer on hitting 50% year over year. Elon pretty much said that. He said, we'll sacrifice margin. Who cares? Let's eat the competition. And I love that. But inevitable that if that's the goal, and if what Elon predicts happens and everything we're seeing around us, like if you just look objectively, everything is slowing down, well, then it's inevitable Tesla slows down. So from the stock perspective, I think what'll really hit the stock, and I think we might see it, we might start to see it happen in January, is that margins might be lower than what we expected. Now, I don't know if that'll actually happen, but
You're
I
talking
could
about the
see
Q4
that.
earnings report?
Yeah. Like
Okay.
you guys know me. My estimates are always overly bullish. But while
You and I
I'm very
both.
bullish on my estimates, my predictions, and what I think they're going to come out with and products and stuff, I'm also very, I think grounded and level headed with what present day looks like. In present day, we saw how much they had to spur up demand, whether it was in China, whether it's here today. I mean, now you see, I don't want to say protest, but a lot of noise being made over in China about these price cuts because people feel like they got screwed over. Like, what the hell? Like, we want these discounts, all right? So there's more noise there. So I don't know. It just seems to me like it's inevitable that there's probably more downside risk right now. I don't think it's a lot, but I don't think you can rule it out. And I don't think you can rule out the world is slowing down, period. I mean, the fact that you see oil coming down, right? Like that's because the world's slowing down. Like that's the easiest bellwether to look at. It's oil prices.
Especially with Russia out of the equation.
Russia out of the equation. It was coming down with China shut down. I mean, that you could say, okay, well, that's why it was happening, but I'm sorry, that's not the whole reason why it's happening. To the point where OPEC, this is how much oil or how much the world's slowing down. OPEC has made, I think, two cuts in production, yet oil is still going down, not up. Think about that. This is after two cuts of production. Yeah. So what does that tell you? I mean, that tells you something, not nothing. Now, again, I think Tesla over the long term, it's no brainer. I agree with Elon, with Ron Barron, with all these people who say it'll be the most valuable company ever. I just think this might be a rough 6 months. And really, I hate to be that person, but as excited as I am for March 1st, it almost makes you wonder if if there's other motives behind just pure, hey, look what we've been working on. I think it's hard to ignore that possibility.
Those are all very interesting points. There's something else I want to show as well that kind of talks about your OPEC is cutting rates or cutting production, and the price of cars are still coming down. If you can pull up this tweet here, producer wife, this is again from Car Dealership Guy. This is a very interesting chart. This is specifically to the car market.
But before you go over this,
please.
Can you explain this? Because I saw you post this, and I don't know if I actually understood it. I think I did, but could you explain this?
Absolutely. So this is the columns that are coming down. These are all individual car brands. So the top is Toyota, then it's Kia, Lexus, Land Rover. Then the horizontal call it length of the bar. So how long the bar is how many days of supply, new vehicle days of supply is out there in the United States on dealership lots for these cars. So if I take the top bar and I look at Toyota, the Toyota bar is somewhere between 20 and 30. You can see the 20 and 30 on the top there, hopefully. Mm-hmm. That means that Toyota in the United States has roughly, call it 25 days of supply in dealership lots, which means that if you take all the Toyota cars that are in dealership lots added together and you divide it by the average number of car sales from these lots per day, then that tells you how much basically days of inventory they have on dealership lots. Anything in dark blue is basically call it an international brand, non-domestic. Mm-hmm. Anything in green is GM. Anything in light blue is Ford, and anything in red is Stellantis / Chrysler, what used to be Chrysler. Okay. So what this shows is that as of November 2020, there's sort of this thing starting to happen where about half of the brands, call it the major brands in the United States, are over a healthy supply, which in typical car terms is 60 days. And about half of them are, call it below healthy supply, which is below 60 days. But here's what's concerning about this for me, from this sort of, you're talking about the economy slowing down and people stop spending and all this good stuff. If you go towards the bottom half of the chart, really technically more than half. So if you start with Chevrolet, which is the first green bar. So Chevy, Nissan, Mitsubishi, GMC, Cadillac, Genesis, Ford, Audi, Chrysler, so on and so forth. All these brands have more than 60 days of supply on dealer lots. The others don't. Toyota, Kia, Lexus, Land Rover. Toyota, like the Japanese brands, international brands, tend to have a little bit leaner supply on dealer lots historically. And just FYI, from like, if you want to compare it to Tesla, Tesla has like 10 days. They don't really report because they don't have dealerships. But if you kind of divide their sales by how much inventory they have usually out there, is like 10 days. So like they are twice as good as the best in the dealership standpoint. But that's besides the point. The reason why this is a big deal is because what did we hear in 2022 in the whole year? Dealer lots are empty. Dealer lots are empty, right? Like they're like I can't get a car. There's supply chain issues. There's chip shortages, so on and so forth. I'm like, okay, so that's an interesting thing. So what's happening now, and I'm going to send you a different link, producer wife, so you can pull this up and I can kind of talk about this a little bit more in depth, is that you have, let's call it the majority of major brands in the United States have more than a healthy supply of cars in an environment where the dealership lots were empty for most of 2022. So that's number one. Now pull up the last link I just sent you. Perfect. So Tesla breaks into America's best-selling cars list for 2022, but trucks still dominate. So that's a nice headline from CNBC. Scroll down though. Let's start looking at the individual brands. So let's go for the first one. Keep going. Ford, number one, as always, F-150. Down, F-150, the Ford Series F-150 series is down 9.9% 2022 versus 2021. Still number one. Number two, Chevy Silverado, down 1.2%. Down. Next one, Ram pickup. Number three, down 17.7%. Go to the next one. RAV4, down 1.5%. Toyota Camry, down 5.9%. Tesla Model Y, besides the point, up 32%. First time in the bestseller top 10 list. Congratulations, Tesla. This is a trend that people should be taking notice to if you're a legacy automaker fan. Keep going. GMC Sierra, down 3%. Honda CRV, down 34%. Toyota Tacoma, down 6%. Jeep Grand Cherokee, down 15%. You know, if you're in the US, you know the Cherokee is a very popular brand, down 15%. Now go back to the first one I sent you with the bars. Why do we have most of the lots in the United States above healthy supply when the year was slated as our dealership lots are empty and every automaker is down year over year? This is a signal. It's exactly analogous to what you were talking about with OPEC oil. They're cutting production, yet their prices are still coming down. Why? Because there's a lack of demand. There's a lack of demand. This is exactly what's happening in the auto sector as well. They started the lots with empty lots. They've ended the lots with most of them above healthy supply, and every automaker shipped less than the previous year. That means that the amount of net cars that are being bought each year, like in 2022, was significantly less. The dealerships were selling significantly less cars in 2022 versus 2021, which goes towards the point you're making, which is, hey, people are not spending nearly as much. And we're also seeing that in used car prices, like freaking plummeting. My brother has been trying to sell his Chevy Volt for like 3 months now. It's like sitting in my driveway because, you know, he lives in an apartment. He doesn't have 2 spots. And I'm like, what's going on? He's like, dude, I'm having such a hard time selling this car. Like nobody wants to buy the freaking car. And I'm like, maybe it's a Chevy Volt. That's why he's like, no way. Besides the point. But yeah, there's just a lot of signal. So what, do you have any thoughts around this? Because I can keep going for 2 hours on this, but let me know what you're thinking.
Yeah. So a couple thoughts. So first of all, to explain like why I was confused when I looked at this is because it almost seems like satire to me. Like it's sitting here saying healthy supply to the right. I'm like, wouldn't that be more like unhealthy, like on that side? Like this is like the obese line. I don't know. Not that.
Yeah, you would think 20 is like healthy.
Yeah,
sure.
Yeah, exactly. Yeah, I'm like, all right. What I would say is, so I agree with everything you're saying. Like this is a perfect example of what I'm talking about. And my whole point in everything with Tesla isn't that Tesla is going to look like Buick tomorrow, but my point is more so that Tesla doesn't normally have 10 days of supply. Let's just put it that way. Tesla, I think in the last, don't quote me on this, but I think normally anywhere from 4 to 8 days of supply. So we normally see 10's more. and we'll see what it is this next quarter, right? I bet you it'll be a little higher. And so, no, it's not going to look like Buick tomorrow or anything. But the point is that Tesla is feeling the impacts as well. And again, you don't have to take my word for it at all. Elon himself is telling you this. Like he can't make it any clearer for people that there is stuff happening. He sees a huge recession coming, that they will probably have to drop prices because they'd rather put volume out there than not. Like you can't get more direct from him. You're not going to hear this from Tim Cook. You're not going to hear this from Benioff. You're not going to hear this from any other CEO. Elon is telling you what he thinks. So that's the rationale from my mind, is just looking around, seeing what's going on, and understanding that Tesla operates on Earth as well, right? And so they're not immune to the impacts of the global issues people are having, you know. And again, if you look at this, honestly, I bet you, look at Land Rover, 30 plus days. I bet you that's not a normal supply for them. I bet you that's high for them. Like Land Rover, like I find it very hard to believe that they're normally that high, right? So even though these are under the healthy bar, I would bet you that a lot of these are more supplied or have more days of supply than what they traditionally do. And
no, it's traditionally 60 for legacy auto for sure. Oh yeah, 100%.
No, but there's a difference between saying a Ford or GM versus a Land Rover versus a BMW, right? Like there is a difference there. One might have a whole bunch of Honda Civics or I don't know, Ford Focuses or whatever, versus a $60,000 to $80,000 vehicle for a Land
typically,
Rover.
If I recall, like I've seen these charts previously. If I remember correct, I could be wrong, but if I remember correctly, like say 80% of these brands would have a very narrow band around that healthy supply. So it would be like between 50 and 70 for like 90% of them. And there might be one or two outliers that are like at 30 because like say that the brand is just taking off that year, or they're like Buick, you know, which is like 120. From what I remember, I do think most, like a huge majority of automakers, and anybody, I don't know if there's anybody in the comments that works in the auto industry, dealership industry, maybe legacy auto industry, so please correct me if I'm wrong, but I believe that's the case.
Let me say it a different way then. I bet you if you looked at the same type of chart for 2021, 2020, that all of these had lower numbers and they're all growing and growing for the wrong reasons. And I would say Cathie Woods essentially hit the nail on the head with this one, essentially this time last year, where she was calling out GM saying, you keep saying chip shortages. Ford, you keep saying chip shortages. And she was saying, BS, that's not what's happening. And she said, like, eventually you're not going to be able to use this excuse, and then you're going to have to contend with this. And I think time is proving that she was more right than wrong. You know, so, but anyways, my bigger point, again, overall, when it comes to Tesla, it's just, and like, if you're invested, right? Like, if you have stock, like, ignore all this. Don't even look at your portfolio because there's no point. Like, just wait out for long term. Not financial advice, but that's what I'm doing, what I would do. My only point of ever even talking about the stock price really, and as far as like, did we bottom or not, is mainly for your new cash, right? If I were to put all my money at $200 versus at 100, like, that sucks. I missed out. I could have gotten an extra share for every share I bought, right? So I'm just trying to, at this point, say, hey, I'm not trying to time anything per se, but I'd rather time what's happening with the Fed, what's happening with the economy, what Elon says,
macro.
Once it seems like, all right, things are better, or things are about to be better, or we're starting to see some positive signs, then I'll go in. But I don't believe in the positive signs we're seeing. I would say the positive signs we're seeing are the beginning of a potential, maybe not recession, but just harder times before we come out of it. So
okay. Let me role play it makes perfect sense, but let me role play a scenario. So here's how I'm thinking about it. Again, this is maybe my over optimistic, irrational side of me coming out, and that's why I have you on, who's I think much more balanced and just has a better brain than I do. So let me walk you.
Predictions. My predictions are. I thought we were gonna get. The Roadster at Semi Day.
So would you agree that most smart big money is likely in cash right now? Do you think that's a correct statement?
Do you call bonds cash?
I'm talking about like individual. Yeah, bonds are cash. I would categorize bonds as cash.
I would say yes.
Okay. in an environment where there is a say hard economic times, where the economy is clearly pointing towards like a downtrend, do you think that this would be a perfect time for people that are in bonds, for people that are in cash, for people that are maybe waiting for the Fed to pivot? Do you think this would be a prime time for all these big money folks to start deploying it into companies, stocks, opportunities that have a very clear pathway to success in the next 3 to 5 years? Do you think that thesis makes sense?
Yeah, I think that's a hard one. Because there's like hedge funds have a different way of doing things than mutual funds, than ETFs, and right. So everyone has a kind of a different way of how they manage their money. I would say I would say that it's still too early, and I think people are still waiting. And I mean, again, just listen to the billionaires, like just listen to Chamath, listen to David Sachs. Like, I mean, they are, when it comes to billionaires, they're like the most open that we can get into the psyche of what they're thinking, what they're doing compared to Elon. Like there's really no one else like that out there. Maybe like a Grant Cardone, but that's a whole different world. But we don't hear from many people. But I would say it's still probably too early. I would still be more in the austerity camp. To your point before, I would be getting rid of any expenses I don't have. Try to get rid of any debt I have. If you still have margin, I would be.
God
I
help
don't know.
you.
Yeah. I was gonna say it's like
Yeah.
you're probably teetering on that line on getting wiped out at this point. Even when you hear
Depends when you got it. Yeah.
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 But as you say, even when you hear Emmett sitting there saying, he had such a small amount of margin, and now it's like, all right, well, it's not something he can just ignore now. Like it's went from small to now it's like, hey, it's not nothing.
Yeah.
It opens your eyes. So I think maybe. So here's the thing. Everyone, I think right now is getting psyched that CPI might come in at or better than expectations on Thursday. I don't know if that's the case. Expectation is to go from 7.1 to 6.5. That's a big drop. That's not a little drop.
But if you're seeing all these cars like not being bought, if you're seeing all the houses not being bought, if you're seeing like all these different things that are sort of trending up where people are truly holding back, doesn't that just, like, I'll use an example. Like every time I go to HEB, which is our local grocery shop, the bill's lower and lower every time. The same stuff I get, I'm like, it used to be $200, now it's 180, now it's 160, now it's 150, now it's 140. I feel it as a regular person. Don't you think this? I mean, this has to be part of the near-term trends too, right?
The problem is that stuff lags in the data that the Fed looks at. So like housing lags, I think, again, I'm kind of pulling a number out of my ass, but I think it's like 4 to 6 months where it lags. And again, you can just look at the reports and compare it to real life, and look at the JOLTS numbers, compare that to everything else. I mean, like you can just see all the data out there and you can see that what lags. But like even card, I mean, it might be inflated just because we just got done with the holidays, like sure, you have discounts to an extent, but you also have people spending more than they would before. I mean, my point is to go from 7.1 to 6.5. 6.5 is a number that analysts put out there, estimators put out there. The problem is if it comes in at 6.6, the market's not going to like that. The market's going to take a beating. Why? Because this arbitrary 6.5 number, and I've argued about this on my channel a million times when Jerome Powell keeps saying, yeah, it came in harder than we expected, all that. Who cares about expectation number? I think it's the most just ignorant thing to focus on. It's like, oh, we picked this number and we either hit or we miss it. We went from 9.1 down to 7.1 on CPI. Like clearly we're headed the right way. Who cares if you miss it by 0.1 or whatever? It's like it's lower. That's the main thing. But the market doesn't think that way. The market will react. And even if we do get a good CPI print, I guarantee you Jerome Powell's going to come out sounding hawkish again because he's essentially he's in the red zone with this. He's not going to let up now. He's not going to give hopium back to the markets right now when he's in the red zone. It's the red zone. He's ready to make the playoffs. Like I don't see him backing off on his Biden's rhetoric now, and I think he's going to 5%. And anything that we see from housing, it lags in the data. So no one can really point to that to real destruction other than people like Jeremy Siegel, who's banging on the table like we are, saying, look at the real data. Look what's currently happening. Stop waiting for it to make into the numbers.
So I guess what comes to my brain, and again, I think I love that you and I are on opposite sides of this, because where I'm standing is like, I think if the economy does turn for the worse, I think it will happen quite quickly. I think there's going to be signals that start appearing because you have this sort of like thing that's starting to be unwound. And if I use my regular everyday anecdotal experiences, like what I'm using to try and figure out where this is going to go, I think it's going to happen quite quickly. Like if people are not buying homes and if people are not buying cars, this is a huge signal that says like, yo, people are broke. Like people are not spending money. If we're not like, because these are two things, these are the two primary things, especially in American life, house and a home. This is like the American dream, house and a home. If people ain't buying the American dream, like they're not buying a lot of things, right? And so in the same way that I thought the Fed was like pivoted on their stance from, you know, what was it? What was the freaking word they were using? Entrenched.
Transitory.
No, it was transitory. Thank you. That was a very fast pivot. Like it caught the market by surprise because people were like, yo, it's not transitory. It's not transitory. Like, it's transitory. And then after like 9 months, they were like, oh shit, not transitory, right? I just don't see how this doesn't happen again with the Fed, whereas like people are like, yo, you are over tightening. You're over tightening. You're over tightening. They're like, nah, we're good. Yeah, go ahead.
But they've talked about that. Jerome Powell's been very explicit about that. He would rather send us into a recession than run the risk that they stop raising rates or they cut rates.
But that's my point. That's my point. My point is that there's going to be a quick, sudden shift. This is sort of how I'm thinking about it. And so when this sudden shift happens, and I don't know if it's going to be, and this is where you and I have to kind of like maybe play through when this is going to happen, how it's going to impact Tesla stock. And again, we're two amateurs on the internet openly talking about this, trying to figure out what's going on. Please don't take anything we say as financial advice. We're morons, okay? Please, I beg of you. Oh, I'm a moron. He's not a moron. I'm not going to call him.
I was going to say, I'm not that smart.
But I feel like when that happens, it's going to deploy all those people, all those big money people who are very good at managing money, that are in bonds, that are in cash. I think it's going to deploy those folks. It's going to be the signal that says, okay, put the money in the thing that's going to return the most amount of money in the next 3 to 5 years, right? And I don't see how Tesla doesn't benefit from that. And this is where my sort of like medium-term thesis is for Tesla. It's like once the Fed says, yep, I'm ready to go, I'm ready to pivot. My bad. Sorry, everybody. We've literally forced you to lose your jobs. Our apologies. Sorry for ruining your life, basically. Freaking 12 people get to decide how people's livelihoods turn out, which is freaking mind-blowing to me. That's a whole different video. Once they decide the people can start borrowing money cheaper, companies like Tesla, companies like, companies that are growing with super strong financial very strong balance sheets, low debt, high cash, something that's becoming much more expensive nowadays in the standpoint of Tesla. I just don't see how those companies don't benefit tremendously, regardless of the landscape of the world. Because even if there is a recession, global car figures might go from 100 million per year to, I don't know, 60 million per year, 50 million per year. There's still going to be people buying cars, right? And they're not going to be buying the thing that's going to be depreciating in value more fast than the EV, call it, in the gas car, right? I don't know.
Yeah.
This is sort of where my head's at. Where are you at?
Yeah. So let me kind of play devil's advocate. I kind of agree with what I'm about to say, but I also kind of don't. So my devil's advocate to that would be, so you're saying eventually the Fed's going to see a signal that things are so bad and they're going to be forced to do something.
Yes.
I completely agree. That's how it tends to always happen, right? The thing, but going back to my initial point about, be careful Tesla stock right now. Like, and again, this is, if you own it, like, there's nothing to be careful about. Like, you're down 80%. You just hold on to it for a long term, right? Thesis is still intact. But in the next 6 to 12 months, we obviously haven't hit that pain point where the Fed is pivoting yet. So that means just by that, things probably will still get worse. just based on what you're saying right there, right? Like things clearly aren't bad enough right now for the Fed to stop doing what they're doing. And the Fed is going to keep raising rates because they think they're on the right track. And right now, it looks like they are. People are now talking about a soft landing and, all this stuff that's happening. And, the Fed's like moving from one topic to the next topic as far as what they care about, right?
But
That's
don't you
good.
think it's already priced into Tesla though? Like what you're describing of the say, what's the terminal rate? 5%, 5.1? What the hell is it at now? Go ahead.
Yeah, I think 5 to 5.2, I think. But okay, so this was gonna be my second point, and I don't really agree with this time, but this time's different. Normally, the market bottoms after the Fed has pivoted, not before.
Okay.
So if that's the case, then I don't know if everything's baked into it.
But the
And
market is not. I mean, but do you think individual stocks are the market? Like, don't you think there's going to be outliers in that market? And why wouldn't Tesla be one of them if it's already and this comes again, this comes from the standpoint that I'm at. And again, this is short term. Like, it's impossible to predict. But like, I feel like Tesla has had an outsized downward spiral since October that hasn't really tracked the market. So what my gut's telling me is that what could happen to the market based on what you described very astutely, and I honestly I agree with you, things will probably get worse macro wise. But when you're talking about the individual stock, I just feel like I don't know, man. Like anything is possible, but
okay,
go
tell me
ahead.
this. Tell me this. Why won't the stock go lower?
Because I think there's too many positive things about the stock and everything humanly possible that could have been say a negative catalyst for Tesla and the story. I can't think of anything else that could be bad for Tesla outside of, say, Elon gets kicked out of the company, or God forbid he's no longer able to work for whatever reason at Tesla. I don't know what else. The margin story is baked in, the demand fear is baked in, the China fear is baked in, freaking recession's baked in, the Fed increasing rates is baked in, potential recession is baked in. I think it's baked in. I don't know. You tell me, because every time those negative headlines come out, boom, the stock takes a freaking 8% dive. Do you think I'm wrong?
So
don't let my passion overrule you. By the way,
I don't know if you're wrong. I'm just more so in the camp of what can go right to make it go up, because I haven't seen anything going right to make. I would be shocked if after these quarterly earnings, Tesla stock goes up. I can't tell you the last time after an earnings call it went up. And if it hasn't on the last few,
which is a signal that it will.
Yeah. I mean, hey, I don't want to be right. I'd rather be wrong. Are you kidding me? But yeah. I'm just saying, like, it's like, I remember there was one call, maybe it was Q3. Yeah, I think it was Q3 earnings. I don't know. No. Q1 earnings, maybe. I don't know. It was one of them. And it was amazing. The stock was reacting. The stock was up $20, $30. And then Elon started talking about the robotaxi and the bot. And I'm just sitting there listening to Rob on his live stream. And I'm like, oh my God, the stock must be at 60 now. Nope. It went to negative 20. And I'm like, what? How does this make any sense? Like, this is unreal. I was like, this is the most amazing call ever. And the stock is tanking. Like, so,
well, that was the call where he was hyping up all the stuff, right?
Yeah.
Yeah. And then he sold.
Yeah. Yeah. Like, literally, it was up, and then you saw it down. I'm like, what is happening here? But so I don't know what can make it go up at this point. And I think it's only macro. Berlin, Austin, FSD, investor grade. I mean, everything in 2020. There's so many things that Gary Black's list, essentially all the things that have happened were negative catalysts, not positive catalysts for Tesla. So my whole thing is like, what's going to make it go up and keep it from going down? As far as going down, if Elon decides he's not CEO anymore and he just wants to take a different position within Tesla, that could send it down.
Which I don't think that's going to happen.
No, but I'm just saying.
You're saying that's a variable.
It could, yeah. Like, we don't know what is exactly happening. I don't think it's going to happen either.
Can we do a thought exercise?
Possible. Yeah.
Let's do a thought exercise. So can you think of what would send it lower and what would send it higher? And let's do that in the comments as well. So let's make this into like a freaking workshop. Let's leverage the 1,100 people that are watching this. Thank you so much. And we'll come up with a poll too to figure out how we can do this. So based on where we are now, go ahead.
Yeah, I was gonna say, let's focus on things going down because that's less fun. and then we
Go
can
for it.
focus on the fun stuff because that's
Love
where
it. Save the
I'll
best for
run
last.
with it. Yeah, that's where. Yeah.
Yes.
So
So let's start with things. So on the comment section, sorry. So in the comment section, think of things right now where we are today that if that are potentially likely to happen for Tesla stock that could send it lower. Go ahead.
Yeah. So for me, again, I'll just use Tom Zhu, something like that. Yeah.
Jew, I
There
think.
we go.
Jew. Yeah.
I love how everybody. You gotta love that. Like everybody's like trying to learn this and try to say it right. Like it's awesome. Tom.
Matt Smith knows how to say it right. He knows Mandarin, I think. Yeah.
Yeah, but sometimes his audio it seems like his audio always breaks up right when he's saying like don't know how he said that. So that could send it down. I mean, that could send it up too. You never know, but it just seems to me like if Elon's not CEO, the market sees as an issue. Some might see it as like, hey, key man risk. The other thing too is people might think the narrative can be spun that, oh, here comes China infiltrating Tesla, sending whatever over to focus on US. And I mean, right, they can spin it however they want. So I think
so sorry, and then also and give a percentage chance of that happening as well. So Tom Zhu being announced as CEO and Elon stepping down, that's your first negative thing? Is that what it is? So what's the percentage likelihood of that?
10%, 15%.
Okay.
Yeah,
what's another one?
No, not high. Another one could be during this quarterly earnings. And I don't want to scare people here. I really think this is going to happen. Elon is a person who he says a lot repetitively because he says what's on his mind and what he currently thinks. He doesn't tend to fluctuate. If you listen to any of his interviews or anything, like I could give you an example of an Elon interview, what he talks about, whatever, during the time of year, because it's what he's thinking about. Well, during that Twitter Spaces where he openly expressed what he was thinking about Tesla and recession, all that, I think that a lot of that type of conversation might come up on the earnings call. And if he's painting Tesla in somewhat, or not so much Tesla, but just saying that it's going to be a tougher time out there, whatever. And he'll say, same thing he said on Twitter Spaces, Tesla will be able to weather the storm. We'll drop price if we have to for volume. That's why we have all this cash on hand, right? He'll paint Tesla like with the reality, but I would be shocked if Elon does not say what's on his mind and he doesn't start talking about that. And that spooks Wall Street, right? Like, because they'll say, oh, Elon must be seeing demand issues and that's why he's saying all this. And so I think the conversation on the earnings call, just that alone, things said, could send the stock lower. So to me, that's a 80% chance of happening.
I can see that. What else? Anything else that's negative?
As far as earnings themselves, margins, I could see margins taking a hit. Now, there's a lot of smart people out there who are doing. I mean, we're on some group messages together where there's people breaking it down how like some of these margins might not actually be hit because of production efficiencies and all this stuff, which could be very true. I honestly haven't dug too much into it. I got so many other projects I'm working on right now that I haven't had time to deep dive on it, but I could easily see that being an issue because, again, it's all about the narrative that gets printed, and unfortunately, Wall Street really doesn't care beyond 12 months, but beyond 4 quarters. And so if they see margins coming down, well, they're going to say, okay, here's Tesla coming back down to earth with their margins, law of big numbers. The more they sell, they're going to have to drop the prices to get the demand, and it's just inevitable, right? That could be it. And even if it's like a 1% miss on margins or 0.5%, it's the narrative that gets printed that moves things. And again, this isn't me being a naysayer. It's just being pragmatic. How many times do we have to see this before we know what's going to happen before it happens, right? It's been the same thing over and over and over again. So that would be the next thing for me. And as far as something like that, I'd say it's 60, 70% chance.
Okay. What about positive? So there's 3 negatives, right? So there is Tom Zhu being announced as Tesla CEO, Elon stepping down 10%, 15%, very low. I would put that at like negative, not negative, like 0.01%. Like I think Tom Zhu being announced as the head of automotive makes a lot of sense.
Yeah. I agree.
And I think it'll be announced in the quarterly earnings. So I will put that at like, so that's a positive catalyst for me as an example. Tom Zhu being
Yeah.
the automotive head, to me, that's a positive catalyst because it
Oh, I
retains
agree.
Elon. Yeah, yeah. So
I'm just saying
what's
how the market will see it.
no, 100%.
Yeah.
Yeah, but I think the market will see it as positive because it's like you said, one of the fears was second in command, strong number two. Elon's taking on all these things. Like, who's going to be there to try and help the company, move forward in sort of these times of recession and stuff? You need somebody who has a proven track record.
You remember
You
that
know,
CNBC article you just had up about Tesla jumps into the top
number
10?
six.
Yeah, number 6. Yeah, but but trucks still lead, right? So
Hmm.
you see how like even when there's good news, they still manage to do something. It's on and on with Tesla, right? So the headline for that, it's simple. Tesla brings in Tom Zhu to help issues at Giga Texas and Giga
Yeah.
Berlin from a
Oh, by
horrible
the way,
ramp.
he's a communist.
Yeah. Oh, yeah, yeah. Throw that in there. Like, it's. I mean, you can go on and on.
Okay. I can see that. I can see that. Yeah, yeah. The negative spin for sure. I can see the
Yeah.
negative spin. But I do think, I guess within the context of like if it's a catalyst, maybe the jury's out. But I do feel like I feel like net it would be a positive catalyst because it does put to rest some of the fears that it seems like Wall Street has about Tesla's, call it succession plan or ability to have a number two that's going to be able to drive the business without it in their head, like a perception, right? Doesn't matter. Reality is very different from what's being perceived, right? Reality is that Tesla's fine, more than fine. Perception is that it's not. So
I,
for some reason, good.
I will say just my own personal opinions. I don't think he would be the successor to Elon.
I don't think so either.
Yeah.
No, I 100% agreed. Yeah, and we can talk about the successor too, but I think it's like JB Straubel. I think he would come back anyway. That's a whole different discussion. So I think that's one positive catalyst that could also be spun as a negative. Then the other negative you said was Elon with scary talk on Q4 earnings call about recession and this is going to be a rough year. We're doing everything we can to prepare. We have a very good financial stability. If we're going to choose between margins and volume, we're going to choose volume, right? So there's a lot of like verbiage that could come up that honestly, I think that's like a 99% chance that kind of verbiage comes out on the Q4 call because he already did it on the space.
Yeah,
on the Twitter
exactly.
space, and I think it's a primer. So I agree with you there. I think that's a negative catalyst for sure. And then the third one was margins, right? So Q4 margins coming in softer than expected because of the price cuts. And go ahead.
Yeah, I was just gonna say, and again, it's not. Again, like I can't say this enough. Like I'm not a bear or anything like this. I'm just trying to be pragmatic here.
Yeah.
The thought, like, because I'm sure you're gonna get comments saying, "Oh, it doesn't even matter if Tesla goes down to 20% because they're 4x the next company." Like,
Sure.
I get that. I 100% get that. I agree with you. The point is, what happens with the noise of it, right? It lends this impression like, why are their margins coming down? Why is their demand coming down?
Yeah.
And there's never the well, look at Ford, look at GM, look at like there's never that comparison. It doesn't exist within the world of Tesla.
Where is Wall Street's head at versus what they say is what you're saying.
Yeah, exactly. Like they don't bring in the context. Okay, they delivered 40%. You've never seen an article says, well, we got to have nuance here, understand about the shutdown. You never see that. There's no article from Wall Street that says anything like that. Yeah. So any argument you make in the comments about a nuance, we agree with you. I agree with you, but the stock market does not. The stock market doesn't care.
Yeah. Stock market's very black and white in the short term. It's like ultra black and white. There's no nuance. 100% agree. Okay. So that was 3 negative catalysts. What are 3 positive catalysts that you could see in the near term?
Okay. So, all right. See, I'm already getting
ready.
Producer wife's going to disagree with me on this one. Maybe.
Let's see.
11.3 FSD beta.
Okay.
I think that could be a huge catalyst. At some point, big money is going to see what's happening. And I feel like they're going to be like, all right, besides ARK Invest, but at some point, I think big money is going to see what's happening. They're going to be like, oh my God, like this is not far away from prime time. Like this is really close. And 11.3 might be that turning point where people start saying, you have to go try this now, just to do your own analysis, right? To whoever, right? To whatever portfolio manager, whatever hedge fund manager, like, whatever investment,
Gary Black.
Yeah, a Gary Black, a Blackstone, whatever.
Shout out Gary.
People are going to be like, you have to go experience this. I mean, again, if you haven't watched Farzad and producer wife's last video, I mean, it's honestly one of my favorite things to do is watch them. Me and my wife, we do it like I think Saturday morning. It's normally when we watch like our long form YouTubes together. But it's so much fun watching you guys. It's like we sit there and we have our reactions and she's like, oh, yeah. It's like sometimes she's like, oh, Farzad was too conservative there. I'm with Cindy, and other times like, what are you talking about? Like we get in like debates about what you guys are talking about.
Yes,
so
the content is working. She said, producer wife in the comments said, when FSD stops spiking my anxiety, it's good to go. LOL. So you think version 11.3 could be that? It could be okay.
I mean, because we're not getting 11. We're not getting 11.1. Like they are, I think, are going to be a lot more careful on releases because there's hundreds of thousands of people using this now. So they're not just going to be, it's not going to be like the beta of Pass, I don't think, where it's like a couple hundred people using it. It's hundreds of thousands now. So I think it's going to be a pretty solid release. And as far as her anxiety, has she ever used FSD herself?
No. I
think it's a lot more relaxing when you're behind the wheel.
Very true. Because you're in control. You can feel you're in control. I can see that. I think that's what we'll do. Like once she feels like once she gives it a 9 out of 10 as a passenger, we should switch seats and put her behind the wheel and say, okay, now that you feel comfortable as a passenger, how do you feel as a quote unquote driver of this software? And I think you're right. I think she might be able to like conceptualize just how insane this is, that you literally feel like you're driving, but you're not. And I'm sure she does already, but it will really bring it to reality.
I mean, I get more anxious when I just drive or when I'm in a passenger seat period in anyone's car. I'm more like,
because you don't trust
why are you hovering over there, man? Yeah, well, especially when you're like, you don't have the steering wheel in front of you. Like I'm not used to being the passenger seat.
You're
anymore
control freak.
Yeah, well, it's just and you see people driving, and you're like, why are you making so many lane changes? Like, just chill out. Like, that's how accidents happen. Like, just chill. Yeah.
Okay, so 11.3 potential near-term catalyst. Yeah, see, that's an interesting one because I agree with you, but I'm forcing myself to be more, I guess, conservative or pessimistic on the progress of full self-driving, because if I'm surprised by that progress, then nothing will make me happier. Because if the market does realize it and if they start jumping in based on that technology, the implications of this for Tesla's long-term financial sort of valuation are incomprehensible, right? At present time. So, but you think there is a chance. So what's the percentage chance that this becomes a positive catalyst in, say, the next 3 months?
10%.
Okay, so kind of like in the same realm as Elon stepping down and Tom Zhu taking over.
And that's just because
in the next 3 months.
It's just mainly because people still aren't paying attention to it. I heard an interesting stat, which I didn't really realize. I think it was Herbert who mentioned it, but like Apple with the iPhone, the stock didn't react for the first 4 years that the iPhone was out. And
well, it was also a massive recession.
Yeah, true. Which, hey.
Oh, shit.
Hello.
Did we just figure this out?
See,
jeez,
all
that's
these,
kind of ominous. That's ominous.
Tesla cell phone comparisons, like, this is why they're so gold.
That's kind of ominous for sure.
But it took people so long to realize like what the iPhone meant and that it wasn't just another phone. And people still like, I mean, I guess that's more of a comparison to an EV versus an ICE car. But with full self-drive, like people still like they don't understand. Like they're like, yeah, wait. I mean, even hear Gary Black talk about like Waymo and Cruise, and like, yeah, they have services out there. Cool. That's not the hard part. I think Tesla could have hundreds, if not thousands, of services and small little geos all over the country tomorrow if they wanted to. No problem. But that's not solving the real problem. And that's them with a whole bunch of training wheels on to solve the real problem. And that's the part that people, aren't appreciating yet. It's like, all right, so sorry, we're gonna get a little nerdy here.
Go for it.
Like ChatGPT, everybody's extremely excited about this. And again, All In Podcast, they did a great job to highlight this. So just think of ChatGPT like Tesla's neural nets. Okay, I'm going to simplify this. So ChatGPT is getting all of its data from crawling the web, right? Crawling the internet, getting as much data as they can because hey, the data exists out there, and for companies that know how or have the compute ability, it's really easy to crawl the internet. Not that hard. Now, on the All In Podcast, if you watched it, they did kind of trivialize it a little, or Chamath did. It's not like any company can just go out there and create their own ChatGPT, because it's not just about the data. It's about also creating the engine to make sense of all that data and understanding how to use that, and then creating training models. So there's definitely a lot more to it. It's not like Google can just come out with this, Microsoft, tomorrow. Not happening. But the point is, the data is out there to get. Anybody can get it if you have the compute and the abilities, the resources, etc. The part that I still think that Tesla's so undervalued on is that, you know how difficult it is to get all that data for FSD? It is essentially impossible for everyone else. It's impossible. Meanwhile, Tesla is getting more and more data every single vehicle they sell, right? And then to my point from before, that's not even the hard part. That's not even the hard part. It's the engine. It's being able to take all the data from that data lake, that data warehouse, and be able to take it, sift through it, make sense of it, put it into an application that works, and having that right project autonomy, the labeling, all that, being able to do that. So they don't even have the data, let alone the ability to get the data, let alone this engine, let alone the train. So all these things people are missing. And it's the most obvious thing in the world right now for anyone who understands how any artificial neural nets, deep learning happens. And it's why I keep like banging my fist on the table about it, and why I love it. And I don't really know what my point was with all this. But my point is, if you love ChatGPT and you think ChatGPT is amazing, if you're not using it at work or in life in general, like
it's so sick.
It's an amazing assistant. It's like, why would I use Google when I can just get the answer? Right? Like,
so true.
But if you're impressed with ChatGPT, put that on steroids. Put the challenge of the problem on steroids, and that's what Tesla's doing. So yeah. Again, I think the market's missing it. I think people just don't understand it yet. So that's why I give it a 10% chance.
10% chance in the next 3 months that the market's going to realize potentially that version 11.3 for full self-driving will be the catalyst for the market, the positive catalyst for the market if your and I's thesis is correct about the game-changing nature of this technology, that they'll start to view it as like, oh my God, this is going to be great for the stock long term. Right.
And the way that would happen in 3 months is that someone like Omar or someone does something, some clip or whatever that goes viral, and all of a sudden everybody sees this and everybody somehow knows now about what Tesla does. Kind of how ChatGPT went viral. If that same effect happens, then I think we would see some movement in the stock.
Okay, so that's one. What's another one? What's another positive catalyst?
All right, another positive catalyst will be if you said 3 months, right? So in 3 months, we will have Q1 delivery numbers. So if that number is close or above 500,000, I think that'll be a huge signal.
You think it could be 500,000 Q1 deliveries?
It's gonna have to be pretty close to that if we're gonna hit 2 million this year.
Okay. Well, I mean, there's a ramp though, right? There's a ramp through Q4.
True, but they have the ability to do that now. A number like that, or at least
because they're producing 443. Yeah. Okay. So you think a 500,000 production number for Q1 could be a positive catalyst?
Yeah.
Okay.
Absolutely.
I think you're right, because then that basically guarantees, if it continues through the end of the year, that guarantees 50% growth. Okay, I see that in production at least
in the slowest quarter.
Okay, what are the percent chance that you see 500,000 produced in Q1? Given all your macro fears and stuff.
Well, I think they're going to produce no matter what. I think also, I agree with you. It will be more of a ramp. So like maybe in in Q1 they produced like 460, right? And then like Q2 they do like 490, and they, eventually by the end of the year they're at like 6.5, something like that, right? Or 650,000, like something like that production wise. I could see that happening. But yeah, so a high number on production, I'd give that like a 60% chance.
Okay. Yeah, I
Yeah.
could I think it's interesting because I agree with you. They have 2 million per year installed right now. They have it installed in the really the factory chain, called the capacity chain for the company. So it's not entirely out of the question. I think what I'm tracking is like, okay, so it's highly dependent on China running full bore for every single day without any COVID lockdowns, without any say variables that could throw it down because of whatever. So what are two things that were removed from China in Q4 that were actually huge? Number one, and really part of Q1. Number one, COVID should no longer be a problem moving forward. We're still going through it, but into the next, at least say Q2 at the for sure, COVID is no longer a problem from a standpoint of disrupting industry in China. So that's a huge positive for Tesla and others. And then the other one, which if this is correct, would be a very big positive catalyst, is with the price reduction in China, theoretically, your production rate should be much more closer, if not at, or potentially slightly below, hopefully, a bull would say, the demand for the region, which says that every car they produce out of China for, say, at least Q1 and Q2 will be sold to a customer because of those price decreases, which implies that if China has, I think the fully max run rate is 1.2 million per year, I believe, using the latest numbers. Correct me if I'm wrong in the chat, if that's incorrect. But so that implies a giant number for Q1. Then you got Austin ramping, you got Tom Zhu at Austin helping out, and you got Berlin continuing on their ramp to 5,000 units per week. And then you got Fremont at capacity, basically. So if you add all those numbers up, there's 2.1 million out of 1.2 million out of Shanghai. Call it 650,000 out of Fremont. So that's 1.8. So all you need is 200,000 per year capacity out of Berlin and Austin. That would already put it, that's 100,000 per year. You divide it by 50, that's 2,000 a week. They're both already at 3,000 per week. So the math checks out. The math checks out to 500,000 per year. The big catalyst for me is that at some point, once Tesla, say there is a demand shortfall and they have to correct it with price, at some point, because they use Q3 and Q4 to end the wave, and if we take them to their word, fill the transportation and the pipelines with vehicles, at some point the production and delivery number will match up moving forward, because they've put the cars into the pipelines, right? Which implies that if, say, Q1 or Q2 they come out with a 460, 470, 480, 500,000 production figure, if what they say is true, that they've right-sized the price for the demand, then that delivery number should be bang on with that production number, because they filled the pipelines for the last two quarters, which could be a giant positive catalyst. So I agree with you there. But so what's the percentage chance of that happening? 60% you said for the production number?
Yeah, I would say 60%. I mean, and the reason I would say that's so low is just because we've got the Chinese New Year's. This is normally the time that they stop and they work on maintenance all over the world, right? So it won't just be in Shanghai. It'll be Fremont, probably Berlin, Austin. If they, in Austin, who knows what they try to do there as far as, rejiggering things around, especially since that's such a new place. Berlin as well. I mean, there's all kinds of things that can come up, So,
okay.
But yeah, I think just what matters is a strong Q1 that is better than Q4. I think that's all that really matters, and to show that we're in the right direction for that 2 million. And I think above 450 is that signal.
Okay. And then give us your last positive catalyst.
All right. So this one is
you're excited to share this one.
Yeah. Okay. On March 1st, I'm gonna paint you a narrative. On March 1st, Tesla will announce that they are opening up 3 new gigafactories Mexico, maybe Canada, maybe South
Jeez.
Korea, maybe Japan, maybe, you know, who knows? There's another country for some reason, Indonesia, maybe, who knows? 3 factories. And in these 3 factories, they will be making not the 3, not the Y, not the X or the X. They will be making the new platform vehicle, of which they are ready to get going as soon as the buildings are built. And they probably are going to start building these vehicles sooner. They probably already have something going on in Austin or in Texas or in China as well. Like maybe it's a mock-up line, kind of like we saw Kato for the batteries.
This is the Robotaxi compact car.
Yes, this and it will be priced at $20,000. And the reason I think 20,000 now is because they've dropped the Model 3 down to essentially 33,000 in China. And that only stands to reason that it's because it's going to make sense. It won't cannibalize a $20,000 vehicle. That's a $13,000 price difference. So that is, optimistic Nick, bull Nick, like prediction crazy Nick.
Okay.
Something like that, or some of that, whatever, however it could happen would happen. And the most important part is that this will be on time. This will not be delayed. This is not 3 years out, 4 years out. This will be a product that's on time and delivered either at the end of 2023 or sometime in 2024.
Okay. So I love what you say. It sounds incredible. I'd say that. So I think what's interesting about that is, I think regardless of how many gigafactories they announce, I think what's more important, I think what's more realistic. Well, before we go on my tirade here.
Well, I'm not being realistic.
So what percentage chance would you put that entire picture you just outlined? What percentage chance of that happening in the next 3 months? Oh, Investor Day.
That entire picture happening?
Yeah.
1%. Portions of that picture, I place higher odds on it.
What would you put the highest odds on of those that you described? Like, what's the most likely out of like those things you just described?
That gets announced on March 1st. I would say more than one gigafactory gets announced.
You think that has you think that's a higher likelihood chance than the Robotaxi platform being in production?
Yeah, I'm conflicted on like what we read in that release.
Can you pull it up, producer wife? It's that the Investor Day thing on Discord. Go ahead.
I feel like Elon has said multiple times that, in different occasions that, this isn't the platform for product release or announcements or something of the sort. And I feel like if they're going to release a actual vehicle, that I don't think this is how they would do it with all this other stuff wrapped around it. I feel like you would have it be its own event. I could be wrong, but it's just something about that just feels like they might talk about it, give a little more details about the third generation platform, but I just feel like this is more of like a Investor Day, or not even Investor Day, like maybe this is just about Master Plan Part 3, and that's all this is about, right? Like maybe this is the unveiling of that, but it doesn't feel like it's the event for the third generation platform to me.
So here's where this is an interesting thing to think through, because the point you made around this car being on time and being in the works is, I don't know how much of a benefit Tesla would get by pre-announcing this model too far in advance, because of just how many people, the raw number of people that will be interested in this. Like, I think it's okay. I think Tesla learned a lesson with the Cybertruck at 2019 when they announced it, that, COVID kind of saved their ass. And I think COVID also impacted how quickly they could bring this to market. But that's a long time for people to wait. That's 1.5 million people. If you pre-announce this compact car, and let's say it is around that $20,000 mark in China, let's be clear, in China, because the starting price for the Model 3 in China is $33,000, and Tesla very openly has said that Robotaxi platform, take it to the word or not, believe it or not, or if you want to trust them or not, they've said they think they can get up to a 50% reduction in cost. So that implies a 50% reduction in price if they want to keep similar margins, right? So that's a $20,000 car, like you said. So if that becomes reality and they open up the floodgates for people to reserve, that's millions of people in a reservation line that could be waiting years to get their car, right? That and then that type of person, like if I think about like the different sort of right or wrong, there's sort of like you got people that have a lot of money, people that have less money, people that have less money. You kind of work yourself down, right? I don't know if people would be willing to part ways with money for 2 to 3 years when, as a percentage of their total net worth, that money is much more than, say, somebody who places an order for a Cybertruck or somebody who places an order for like a Model Y or Model 3. It's a different subset of the population. And I think those people would be much, much more willing to buy the car as soon as humanly possible, very similarly to, say, an iPhone, where an iPhone, you put down $1,000 for the iPhone pre-order, and then in a couple of weeks you get it. I don't know if the Robotaxi compact car is going to be within that time frame, but it makes a lot of sense that it would be compressed as much as humanly possible, which implies that production has to be built up before you say, hey, come on down and start buying the car, right? So maybe that's what they talk about, because they say discuss Generation 3 platform. I could see that as a likely scenario where they're like, hey, this is our plans for how we're thinking about the compact car. There's a factory in Mexico going up that's going to help us build this. There's we're going to expand Austin. We're going to expand Giga Shanghai. We're going to put, I don't know, Indonesia, UK. These are all part of the plan, but we're not going to plan on announcing the reservations or how this car looks until we're very, very close to allowing people to buy the car. And I think a signal we'll see for this, if this is true, is if we start seeing leaks for the car ahead of them announcing it. Because if you start a production process, and thank you for putting this up, Producer Wife, you can take it down. If you get to the point where you are trying to get the supply chain ready and the factory lines ready to announce this, you're now involving tens of thousands of people in the process of the supply chain, the materials, the raw materials, the batteries, the design, like just this entire supply chain starts getting activated, and that introduces points of leakage, right? Terrible term, I'm sorry, but points of leakage, right? And so that's what happens with the iPhone. That's why the iPhone is no secret anymore. It's because for Apple to be able to bring you that iPhone within 2 to 4 weeks of you placing the order, they've had to activate this entire supply chain to get everything ready so that you can get it in 2 to 4 weeks' time. If Tesla does that and we start seeing leaks for that Robotaxi, that's exactly what's happening. And that's your signal. That's your signal that says that this is in the works. Go ahead.
I do think there's a chance that you wouldn't see any of that leakage, because odds are they're going to do their best to reuse the same parts that they have, right? So have similar inverters, for example, similar motors, right? Like they're going to try to make things as like for like, where maybe they use one motor instead of two, right? Or stuff like that.
Because it's so vertically integrated, they'll be able to hide it.
Exactly. And I think the big signal will be to watch Idra and see what they're building and see what they're working on. I don't think it's possible, but I still think that they may try to do a single piece car. I don't think it's possible just because there are like so many like little channels and areas that you have to like kind of form out, that I don't think you could do that. I might be wrong. I mean, I think there's always a way to do anything. We just haven't thought of it yet. But if they could do that, like that alone would be game changing, right? And again, we would be blind to it because we would see, hey, there's a 9 or 10 ton gigapress, and oh, that's just another Cybertruck gigapress, right? Like that's what we would be thinking. So again, it could hide in plain sight very easily.
Can I stoke the fires of that real quick? Did you see Sawyer's post from this morning? So can you pull up the last link there, Producer Wife? News: Tesla China. Sorry, no, the next one. We'll talk about. Well, actually, since we have it up, we'll talk about it. Tesla China extends delivery wait time for 2 versions of the Model Y to 2 to 5 weeks following price cuts. That's positive. That means that's
why we're moving.
There's a lot of demand. Yeah. So let's pull up the other link. News. This was 2.5 hours ago. Tesla GigaPress maker Idra has announced on LinkedIn that another brand new 9,000 ton Gigapress is ready for shipping on its way to Asia.
Okay.
Okay.
So, go ahead. You have more?
No, please.
Oh yeah. Okay. So this was gonna be the other thing about why I don't think they'll announce like RoboTaxi or a cheaper model in on March 1st is because, and I think you would agree that this vehicle will first go live in China, not
Yes,
in the
100%.
States.
100%.
And it would almost be. Can I cuss on here?
Fuck yeah.
It'd be fucked up if they did not announce this new model vehicle in China, in my opinion.
I
It'd
agree.
be almost disrespectful. Like, I feel like it's the whole idea of this was supposed to be China design by China, etc. Right? And maybe you'll have the same thing in Europe or whatever, but the first place would be in China. So I feel like that is where it would happen, in China. And then now we see this Gigapress going to China. Well, that's interesting, isn't it?
Mm.
So that's the other reason why I don't think like a vehicle or whatever. I mean, I think they'll talk about it. Yeah, we're working on next generation. We want it to be half the cost, half whatever. Like that's the goal, etc. And we hope to unveil something, later this year or soon next year. Like, I think it'll be stuff like that.
Yeah.
But that's very interesting. I didn't see that.
Yeah. Does that tickle your fancy when you saw that there's a Gigapress going to China? Because I mean, it lines up directly with what you're saying. Like,
yeah,
one could make the argument.
The only thing is, like, keep in mind too, though. I think a lot of these startup Chinese manufacturers are also starting to use Gigapresses. So, so I don't know if maybe this is for someone else, but
can you pull that up again, producer wife? Let's see if there's something on there that would give us a clue. Maybe the color scheme, the Idra Gigapress thing. If you can bring it back up when you get a chance, because there might be something on that post. Can you maximize that? Can you make the video like big? Yeah, on the bottom right corner. Perfect.
Yeah, that's how we like it.
Is there any? But let's get demonetized. Is there is there anything on there? No, maybe not. I would wonder, anybody in the comments, any investigative journalists that we have, is there any way to tell from this video that this is a Tesla specific thing? I mean, the red, like, why is it red? That's kind of odd to me. Like, why would it be red? I feel like go ahead.
I mean, so with a lot of,
so
like,
people can see it's moving.
I don't work for Idra or anything, right? But a lot of times with mechanical machinery, you'll have things that are moving, right? Like this, it's not just that it's moving, right? Those rams are pushing out and back through those hydraulic lines on the left, but it's also that those are all hydraulic lines area. So sometimes it's like, this is the red zone, like, don't go here, hands away from this area. So a lot of times you get colored for pinch points, hands can get crushed here. This could be explosive, right? So that tends to be why colors
makes
happen.
sense. OSHA's wet dream right there. It's moving stuff in red. Yeah. For the right reasons, because it's dangerous.
Talk about demonetizing.
We're using all kinds of innuendos. Sorry, everybody. If you have your kids listening, sorry.
They already know.
Yeah, they do, actually. Surprise. Let's do. I know you have to go here soon. Let's do Q&A. If anybody wants to ask a question while we're talking here, let's put question before your question. Drop it in the comments, and then Nick and I will hit them as we go. And the producer wife will only bring up the best ones, which are all of them. So go ahead.
Quick question to you. Do you agree with what I'm saying, that they'll probably make like a product announcement in China when they announce the
yes, 100%. Yeah, because there's multiple reasons why. Number one is, I think before COVID, Elon was very open about saying that they want to make a car specific for China with Chinese design and Chinese like inspired by Chinese art. Like they've talked about this, and if there's one thing that I've learned about Chinese culture is that stuff like this goes a long way, and they really value this because they're very culturally proud of where they've come from, and it's a very culturally rich part of the world. Like, my goodness, like I'm Persian, and Persians are very proud of where they come from, and they're the Persian Empire and all this good stuff. I know that the Chinese culture is very similar in that way. They're very proud of being Chinese. So I think having that, I do want to address the poll results. Bring them up, producer wife, when you get a chance. Go ahead.
And give me 1 second. I just think something's at my door. Give me 1 second.
No problem. Yeah. I'll go on a thing here. Here, I'll remove you. Monologue for like 2 seconds until Nick comes back. I think oh my God, why is this so weird now? I'm like nervous. I do this like 1,000 times a day. Yeah, I think Tom Zhu coming out and doing interviews around him saying that they're looking forward to designing a compact car for China is a big deal. And I think that tells me that it will definitely be first for China. That's one. Number two, the fact that the way the market is playing out in China, they're going to do extremely well if they're able to put a cheaper car into the market that's going to help them, say, fight off this quote unquote BYD competitor. BYD is putting out incredible amounts of car, like super props on the way they're ramping, but most of them are hybrids and most of them are in a class or two below what Tesla sells in that market. So that type of car is going to do extremely well in that region, and it's going to be one that's going to be very helpful for them to reach the 20 million per unit car in the market. So those two things tell me that for sure they're going to put that car out in China first. Did you hear all of that?
Yeah. Yep.
Yeah, you had your headphones in.
Yeah.
So
I love that you said that about BYD and like, the hybrid part. I think a lot of people talk about that, but I don't think a lot of people talk about it's a different segment. It's not exactly the Model Y, Model 3 segment. And so I would say not all deliveries or all volume are created equal.
Yeah, for sure. And then we have the poll results as well. Producer wife with her sick producing skills. She's got a freaking moving banner at the bottom. My goodness. For Tesla stock, we opened up a poll. Are there more ... positive catalysts, negative catalysts? 82% say there are more positive catalysts than negative catalysts, and 466 people voted on the poll. This channel is like, I think 95% bulls, so I'm not surprised by the results. I think most people based on that responded feel like we have more positive ahead of us. But the way you've painted the picture around the negative catalyst, like especially around that Q1, like the Q4 call and the verbiage that Elon could put out there around recession and getting ready for a potential downturn, I think could spook a lot of people. I think that's 100% right. It's just a question of how much of that is already priced in.
Yeah, but my negative on Tesla stock, the price action has nothing really to do with Tesla. It's the macro and what the macro inflicts on the Tesla, So whether that means lower margins, whether that means, having to reduce costs for more demand, like that's happening because of what we are right now. That's unequivocal, right? I mean, all this stuff about, is it Twitter? Is it not? Is it Elon tweeting? Look, I'm sorry. None of that's affecting demand in China. It's not. It's macro. And that's why they're having lower prices. And eventually the opposite will happen again. And we'll be in a world where Tesla has to raise prices again. But, it's when Tesla cuts prices, they have a demand issue. When Tesla raises prices, well, it's because they're trying to gouge their buyers or because they need higher prices to make it affordable. Yeah. There's never a win-win, but we can at least try to understand why it's happening. And, let's not be blind to the economy right now.
No, great points. Very balanced. That's why I value your opinion so much, is because you are a Tesla bull for sure. But I think you're able to separate signal from noise for near-term trends, irregardless if it is positive or negative for Tesla. And that's why I value your opinion. And make sure you go check out his channel, Investing Against the Grain. We'll pull it up before we go out. Producer wife, if you can have that stage for the end, that would be amazing. But let's do Q&A here for the next 10 minutes. I definitely want to keep you longer than I have to. So I know you have stuff to do. So let's go ahead and pull up some questions, producer wife. We'll hit them as quick as we can, go as many as we can. And then we start with Trevor. I'll give you the first answer for all of these. And then if there's anything I need to add, I'll add. Question: thoughts on new platform being profitable to the same extent as current margins? Fantastic question. How do you think about this?
Why don't you answer? Let me think about it.
Okay, no problem. That's fair. So it's heavily dependent on what Tesla's strategy is to get this thing out in the market. All right. So I think the margin question is is like a red herring for the robotaxi or this compact car, because think about the two implications here. And this is all rooted from the thesis that says that if Tesla were to release a $20,000 to $30,000 car, depending on the market, that it would do incredibly well. I think that's where the thesis of a Tesla bull comes from, is that compact car for Tesla is going to do nuts. The question between are they going to make a lot of money or destroy the competition, I think is irrelevant. I think them announcing a car, period, is the positive, is like the good thing. And it all comes down to how much production is Tesla going to be able to create to sell this into the market. I think by the nature of Tesla's, in my opinion, as a Tesla bull and a biased Tesla person, in my opinion, I think Tesla has a product superiority that is still nowhere close to being matched. It's just the what Tesla offers from a total package perspective, value per dollar spent on a vehicle. Tesla, I think, is a factor of 2 to 3 times better than any other vehicle, in my opinion. And that will lend itself to, okay, how does that line up with Tesla's ability to produce? If Tesla's production is at a point that they can flood the market with this incredible bang for your buck, they will benefit from a profit perspective if that demand outweighs that ability to produce. And if they can somehow align the production to be lined up with that incredible demand, then they won't make as much margin as they could because they've decided to just flood the market with this thing. But two things hold true with this strategy. That's true for both. Tesla wins. Tesla wins. Because profit implication is that Tesla makes a gigantic amount of money. Volume implication means that nobody else is going to buy anything else but that compact car. And everybody else is in ruins. Okay? So that's how I think about this question. That's a long answer, but I think that's the equation. What do you think?
Yeah. So, all right. So here, I'll unpack a little bit more about my optimistic thought. So I mentioned about the idea of new gigafactories or them building the next generation platform in China, right? I think, and I wouldn't have thought this until, again, I watched the All In podcast. If you're not watching it, you're missing it out. Did you know that labor in Mexico is 1/3 of the labor costs in China right now?
Yeah.
So if that's the strategy, is to build these in China and Mexico, plus whatever efficiencies they get, if they do single piece casting, if they do less batteries in the car, go down a single motor, whatever, you go on and on where they can make cost savings, they have a smaller vehicle, then maybe not the same margins that they have right now, but doesn't need to be at that point, right? Maybe the margins are 22%, 23%, in the 20s, right? I think that'll be good because don't forget, the real margin amplifier is autonomy. So when you throw that on top of it, like that's where things get, nutty. And that's assuming no robo taxis even, right? Like it's so
right.
So I think they know what they're doing. I think there's a reason we're starting to see stuff in Mexico. I think there's a reason why it's going to be it's been marketed as a China built vehicle. So yeah, that's kind of my thought.
That's a great thought. Yeah. Mexico labor cost being 1/3 that of China is like the implications of that are nuts. Because the Model 3, think about it this way: the Model 3 in China is 33,000 starting. In the States, I think it's 46,000. So that's a $17,000 gap that is mostly due to labor, and some raw materials that you can source from that local standpoint. Which Mexico it's extremely resource rich. A lot of lithium, a lot of raw materials in Mexico. It has a lot of benefits. And then the labor cost in Mexico is 1/3 of China. So that Model 3 in Mexico, they could probably produce for 28,000, 27,000. So imagine what that's going to do to the compact car, right?
Yeah.
Forget it.
I mean,
these are very rough numbers, but that's the math. That's how it plays out, right?
Yeah, seriously. Like if you think Giga Shanghai is the most cost optimized factory, I mean, Mexico could be the most cost optimized factory. And in my experience with the different industries I've been part of, nobody works harder than Mexicans.
Dude, legit. Especially living in Mexico, bro. Like Mexicans have a reputation of just, dude, everywhere I look, and I hope this doesn't sound racist, but holy shit, they work, man. And the work ethic is nuts. It's very similar to that Chinese culture. It's like it's just true. It's like they just have a culture of just hard work at all costs because they're proud. They're proud of that hard work, and they want to, care for their family. They want to go out there and hustle and make it happen. So it's beautiful. I love it.
Yeah,
I really do. And then here's this question is like so fascinating. Take that. So you have incredible work culture, right? Very proud people, beautiful people. You have labor costs from a economic perspective, global economy perspective, that are 1/3 that of China's, right? And then you have a factory going in theoretically in Mexico that's going to be the most automated of any factory that Tesla has built. So you have incredible culture for work ethic. You have 1/3 of the labor cost in China, and you have as little humans as humanly needed for the factory.
No. And you know what the best part is?
Right?
It falls under the whole North American, like for the tax credit. Like, I mean, the batteries can be made in the States and shipped right there over the board. I mean, like and on top of that, it seems, I mean, there's signs, welcome Tesla and all, like, it seems like they're trying to, get things going before they make announcements now, which is, it's nice.
Beautiful. What a great strategy, right? And they're almost using like this period and craziness to like switch that strategy up. And it's kind of like taking advantage to sandbag potentially. Again, this is our optimism coming out. But if they're doing that from a strategic perspective, boy, like they're talk about loading up a spring. And I meant to say living in Austin. I don't know what I said. Producer wife said living in Austin asterisk. That's what I meant to say. We live in Texas in Austin. That was the thing. All right, let's do. Oh, I meant to say Austin. Bro, like the tacos are so good. I don't know what to tell you. You don't know where you are half the time. Let's do a couple more if we can. Let's do the next one. From Vatsa, question. Looks like stock buyback and Twitter CEO selection talks have stopped. Are they not positive catalysts? Thanks. How do you think about this one?
Yeah, I don't think the stock buyback's really that big of a catalyst for the short term. I think they're probably better off just keeping that cash on hand right now. And I think whenever they decide to buy back stock, that will probably be a signal. But I think Elon's been too close to. I mean, we see this. Like we all know the history. He's been so close to bankruptcy so many times, so many different companies. Why? Why do a stock buyback? For what? He already thinks it's gonna be the most valuable company in the world. Like, why? Just to make some returns on it? Right now, cash is king.
Okay. Yeah, I think stock buyback will be a signal if it does happen that says that Tesla literally doesn't know what to do with its cash, and so it's going to own more of itself, and it's a signal that says that an already strained outlook that Elon has for the economy is not enough for them to feel like they need to stock up on cash. So that's the signal, right? Elon very publicly says, economy is going to be trash. I'm preparing for the worst. I'm telling everybody to prepare for the worst. Oh, and by the way, we're going to use our cash to buy more of ourselves. That's the signal that says we have all the cash we need and we're going to be fine. So that's a beautiful thing. I think it is a positive catalyst. I really do think so. And I think it will happen. I think it will happen just because it's as a public company, you have fiduciary duty to, do these kind of things. And then Twitter CEO, you were going to say something. Go ahead.
Yeah, I was just going to ask, but do you think that the buyback happens like March 1st?
I think there's a chance. Okay. I think because the China that I have to think about this more, but that China story that just reported this morning, the China wait times going up because of this price cut, to me says that in a part of the world that has had a lot of hardships in their economy, there's still a lot of demand for Teslas at the right price, and they're still going to be making money on that. I don't know, man. That has a lot of good implications, right? That starts painting a rosy picture. But again, it's just one data point. We need more. Mm-hmm. And then Twitter CEO selection. I mean, he already said he's going to announce somebody, regardless of who it is. I don't think it matters. So I think the Twitter stuff is I think it's inconsequential. Really, the only thing that happens with Twitter now moving forward is how much of a tool does it become to ensure that Tesla demand in the long term is as high as humanly possible. That's about it.
Yeah, I think the Twitter noise is kind of over with now.
Yeah,
for the most part, he'll pick a CEO eventually. I don't think it's gonna happen soon, to be honest. Again, listen to all in podcasts. Just listening to, I think it was David Sachs was being asked about it, or maybe it was a different interview I watched. I don't know, but he was essentially saying yeah, Elon will step down as CEO, but he still has more stuff to do. Right? It's not done. There's more things to do. He's got to find the right person. He's not gonna rush into anybody. So.
Yeah, which is the right thing to do.
Yeah,
Good
exactly.
business leader. Do you have time for one more? We'll do one
Yeah,
quick one. All right, let's do one more.
I got time for
Let's
two
talk
more,
about it.
but
Two more, perfect. Look at that.
yeah.
You're so kind with your time. Question: Is there any info on Megapac's profits boosting Q4? This has been a topic. That's one of my catalysts for the next 3 months. Is I think energy has a chance to surprise. I don't know if it's going to be material enough to like add, I don't know, $1 billion to the bottom line for the quarter. I just don't think that's how, I don't see how that's possible. But it could become, the uptick could be something like, say Q3 was, I think if I remember correctly, it was about $1 billion in revenue. If it's like 1.5 billion in Q4 or 1.6 billion in Q4, and with the news of Lathrop coming online and not being fully ramped yet, that could have a lot of implications for 2023. The profitability piece of it, a lot less moving parts, much simpler to build. I think and plus the EV tax or the IRA tax credits they get from it. But I don't know how big of a material impact it's going to have in Q4. What do you think?
Yeah, I don't think it'll have that much of an impact on Q4. I think up until like the last month, people haven't been too bullish on the energy. But again, if I believe in Elon, and I think he knows a lot of the stuff better than I, and he thinks the energy business will be bigger, or just as big as the vehicle side of it. So to me, eventually this does become very meaningful, but I think in Q4, we're still not there as far as it being meaningful to where Wall Street looks at or analysts take it seriously. So Q4, maybe not big news, but by the end of this year, might be a different story.
I agree, 100%. Last one. Who gets the last question? Tony De Vera. He comes on the channel quite often. Thank you, Tony. Question: What margins does Tesla Energy have to show before it actually gets included in the stock valuation? Yeah, this is sort of like a continuation of the discussion. I mean, right now, if I remember correctly, it's at somewhere in the 9 to 10% range or so, based on the last quarter. I think, it has to show and continue. Like, say it goes up to 12%. Or it goes up to 15%. If there's improvement quarter over quarter, I think it will force analysts to take part, to have to add it. Because if you don't, you're missing out on, I don't know, $1 to EPS in the next year or two. That's significant. That's, that's 10 to 20% of the Tesla valuation story. How do you think about this one?
Yeah, no, I agree. Like and I don't think we're going to see real margins until we hit more volume. Right. I think that's kind of like the linchpin. And so with Lathrop, that's where we start to get a volume, and that's where we can slowly start seeing margins come in. I mean, if you look at it compared to the last few quarters, it's actually looking better than what it was. Right. So there are signs of optimism there, but it's volume. They need to get the volume, and, maybe a slowdown like is happening right now, even if it's demand issues, so-called, whatever, it gives an opportunity for energy to pick up the reins or pick up the slack. So I think either way, it's going to be positive. But yeah, I think Master Plan Part 3 is going to be about Tesla Energy.
I agree. It's going to be one of its biggest. It's going to be battery volume, and it's going to be how we're going to get energy to finally be the same size as cars, which is like, again, nobody's talking about it, and it's like right there. It's here. We just have to start valuing it. So, all right, man, we've reached the time. Thank you so much for joining me. Let's plug a couple of your things because you do such great work. Go ahead and pull up his YouTube channel if you don't mind. Producer Wife, Investing Against the Grain. That's the second to last link I put in the private chat there. Talk a little bit about what you do and take us off.
Yeah. So here's a whole bunch of shorts.
He just got married, by the way.
Yeah, it's just we do a lot of shorts about family stuff. But yeah, so my channel is essentially investing in the way probably most people listening to invest, essentially going all in or diversifying very little. I'm essentially all in Tesla. I have cash and I have real estate. So that's pretty much all I do. I will tell you now, I am changing kind of the format of my channel where I'm going to go down to doing kind of one video a week, more so probably live stream. Maybe on Fridays. I haven't decided when, but the idea is to, connect more with people and get more questions and just focus on more longer format. I prefer those. This is a passion project for me, so it's not like it's my day job. So I want to focus on that, being the passion of it and with the community, and not worrying about having shorter videos or anything like that. Right. I want to be able to get nuance. I want to bring people in, talk questions, and just have fun with everybody for a little bit. So that's probably gonna be the new format of the channel. As far as me, I've been an investor since I was about 13 years old. I am a engineer by degree, and I've gone from mechanical to electrical to software to you name it. So I'm kind of versed in all phases of engineering, yet maybe not an expert in any of them. So
nice.
So
jack of all trade, master of all.
Yeah, master of none. Yeah.
And then this is your Twitter as well, Nicholas Gibbs, Nick Gibbs IAG. Make sure you go follow him. Let's get him to at least 1,000 followers. My goodness, let's get him to 10,000. Can we do it?
Yeah, I get a lot of how do I find your Twitter? Like nobody can ever find my Twitter. It's like my YouTube handle is too long to put in there as the handle. So I'm like, oh, I don't know what to do now. Yeah, I have a very difficult one to find.
But make sure you go follow him at Nick Gibbs, NickGibbsiag on Twitter. Nico, thank you so much, man. Always a pleasure. I feel like we can talk for freaking hours. Very grateful to have you as a friend, as somebody I can talk Tesla with, and I hope this was valuable for everybody. I think the back and forth was helpful, and I very happy that we have, like, we're not 100%, like, we actually are in different buckets and a lot of things. We're both Tesla bulls, but we're thinking about the short term very differently, which I think lends itself to great discussion. So thanks again, man. Really appreciate you, and I hope you have a great rest of your day, man. Appreciate you.
Yeah, same to you, and thank you to producer wife for all the hard work here, and just parting words. At the end of the day, when we're investing, look where you think you're going, work your way backwards from there, and you should be in a good spot.
Beautifully said, man. Thank you so much. Thank you, everybody listening in. Thank you in the comments. Thank you for keeping it respectful. Hope this was valuable. And last but not least, like Nico said, thank you, producer wife, for another amazing job. Thank you for supporting this little project of mine that is becoming bigger by the day because of everybody's help. And I'm so eternally grateful to everybody and to people like you, Nico. So thank you very much. Like and subscribe. I'm a YouTuber now. Let's do it. Thank you, everybody. We'll see you in the next one. Take it easy, everybody. Bye.